You've been at this for less than a year.
Yep.
You have 23 clients, tens of millions in AUM.
Yep. And then on the side, we have a hedge fund, which is a totally different entity from us, but yet we're related at the same time because the general partner is the same owner as us.
This is Axiom Alpha, where we talk about building and investing in businesses with unfair competitive advantages.
A lot of entrepreneurs who have had a successful exit, they've had some experience with a wealth manager. They probably hired and fired a wealth manager who turned out wasn't really doing much for them, putting their money into ETFs, index funds. As someone who was involved on the entrepreneur side of things, you're again involved on the entrepreneur side of things, starting your own wealth management company. What is your business model? How are you approaching this differently?
Sure. Well, if it's okay with you, can I back up a little bit so that there's some context as to where this is coming from?
Yeah, please.
So I felt, first of all, if I sound cool or intelligent or anything else of the sort, I promise I'm not. I fell into the position in which I'm in and just been trying to do the best I can ever since. So I started finishing up my master's, and there was a group of people that were really just best friends of mine, nothing really special other than the fact that we were super close. And we started a company together called Trainer Space, which was a personal training facility and really meant to, compete against the Equinoxes and the Orange Theory, so higher end personal training. And a few years went by, we ended up having the opportunity to sell it, and I sold it. I spearheaded the sale for Trainer Space. And after selling, the patriarch of that family came up to me and said, hey, we'd like you to come work for us in more capacities other than just serving on the personal training side of that business.
The patriarch of the family that you co-founded the business with?
That's exactly right, the patriarch of the co-founder, exactly. And so what happened was I started working with him in many, many aspects of this family's life. They were a very high net worth family that needed help in every avenue: estate planning, taxes, allocation of capital, management of assets, et cetera, et cetera. It was really a family office. We didn't use those words, but in theory that's what it was. And I was delegated more and more as time went on, and so what happened was, you're absolutely right. I've been involved with wealth managers and asset managers and financial advisors for a very long time. And what you're saying is exactly right. A lot of them don't bring perhaps as much value as a single family office really does for their clients, because they're able to maybe phone them once a month, once a quarter, get shallow in their life, and then reinvest all the capital in some ETF or something of the sort. And then they just do nothing in between. So what I'm doing with this new firm is really taking everything I learned with a single family office, really serving in every aspect, and bringing that into wealth management. I don't see why you can't take the platform of a single family office and bring that into the life of a normal person that may not be as wealthy as those who can afford a single family office.
So let me ask you, what's your target demographic that you go after now? Is it someone who, let's say it's a $10 million net worth, it's a $5 million net worth, $1 million net worth?
Yep, our minimums are $5 million. So we're trying to cater to those whom are not, $5 million is a lot of money, don't get me wrong.
Yeah.
But a $5 million net worth typically can't
doesn't buy you a family office.
It doesn't buy you a family office, exactly. Not even remotely close. But it could if you can structure a company that can give that ability nonetheless, and that's what we're trying to do.
So what would you say is your main value proposition? Like, I think a lot of entrepreneurs have a bad experience because they sort of come in and, for one, I think there's a lot of bad wealth managers, but for two, I think sometimes people come in with the wrong expectation. They're actually somewhat financially savvy, and the wealth manager, they're targeting someone who wants nothing to do with their finances. And they're like, hey, if you don't want to worry about your finances, you can come to me and I will handle it all. You're not going to outperform anything. We're just going to be average performance. What I'm really giving you is just the ability to not think about it.
Sure.
So would you say, is your value proposition, we're going to try to outperform? Is it, we're going to try to just take everything off your plate, we're not outperforming? Is it, we're giving you non-financial service, like we're just going to help orchestrate your life of like finance, insurance, your any legal problems? We're just going to be basically almost like I don't want to say butler, but sort of like a shepherd of
jack of all trades,
exactly.
The one that does it. And I totally understand your question. So the answer is this: it would be dangerous for anyone to claim that they're going to be outperforming markets for you all the time.
But you could say that's your goal.
That is, of course, the goal. Nonetheless, without a doubt, that's the goal. It's incredibly hard, and anybody who's ever allocated capital, that doesn't mean we can't do it. It just means it's dangerous to say that. What I would argue is this: is I see a lot of wealth managers out there, or financial advisors, wirehouses, et cetera, whom are not even remotely close to markets, right? I mean, the person is 40 years old, 50 years old, they've been managing money for a decade per se, and the investment thesis is wrong. The performance is way underperforming the markets, and that would be a problem, right? So what I would come in and say, no, we need to make sure the performance is at least mimicking the markets, S&P, the Dow, And then we can take outside capital and do other special things with. So for example, I've worked a lot with private equity, venture capital, angel investments. And because of all that, I have access to a lot of these things. Well, why can't some of the capital then go into these other things that produce higher alpha? It can, and it should.
So when you say the strategy is we're going to basically handle all of your finances,
Yep.
and we're going to invest in some lower liquidity things like private equity and venture capital, so that even after our fees,
Yep.
we expect you to mimic or outperform the S&P.
You've got it. That's exactly right. That is the mantra, without a doubt. Yeah.
So what is your go-to-market strategy? You just started this company earlier this year.
Yep. Earlier this year, we just started it. Ultimately, go-to-market is a lot of ways. There's some marketing things that are dangerous in our world that we cannot do, but that's okay. Ways around it, it's a lot of word of mouth. In the business I was in, there's a lot of people that have heard of me, that know me, and have interest in working with me. So that is a very good propellant into gaining clients. And then you continuously ask those clients for referrals into others, and it really stumbles and falls itself.
So I think we talked maybe about a month ago,
Yeah.
and you said that you had just started looking to hire more investment managers.
That's right.
And
That's right.
just for context, right, your business model is you're an investment advisor, not a broker.
That's exactly right. We're well.
Which I think is another issue. Not a lot of wealth managers are brokers.
Correct.
So they're just selling you stuff. You're an investment manager,
Correct.
different business model. You're charging, a percentage of assets and maybe a performance fee, not based on I sold you this
Correct.
mutual fund. I'm going to collect a commission on that.
Correct. I much prefer to be in this world than this world, personally.
Yeah.
I'm not looking to try to sell people stocks. I'm not going to say we should be buying this in order to gain commission for myself. I'm not a big fan of that. I would much rather say we get a percentage of the assets, and then if we buy one thing or 10 things and hold on to it because it's the right decision for you, that's what we're going to do. I'm not going to be the guy who's going to push tons of different things just for commissions in our own pockets.
So take us from the beginning, right? You're starting a wealth management company.
Yep.
What does this look like? What are the first steps involved in setting up this company?
Well, first you need to be able to make sure you're licensed in order to do it, because it would be highly illegal to just think you can do this and start making money off of it without being licensed with either the state of Florida or the SEC. So
Right.
first you have to make sure you're licensed properly, which...
That's Series 65.
Series 65, exactly
Yeah.
right. Series 65. Once you have that, then you're really looking into what are next steps. How am I going to be able to build an infrastructure that's capable of managing multiple clients? Anybody can manage one person's money, perhaps your own family or friends or whatever else of the sort, but
Maybe not anyone, but
maybe not. But in theory, you could. In theory, right? In theory. Now, it's whether it's successful or not is a whole other question. But you need to make sure you have the infrastructure. So you need the softwares. You need to make sure you have at least a good custodian to make sure the money's safe in a bank / custodian and brokerage firm. And then you have to make sure you have the right model to be able to handle different types of clients.
So what's your tech stack? You're starting from scratch, right? You're setting up the company. What are the software tools you use to do this?
Sure. Black Diamond's important for our overall software, and I'm wondering how deep I should get into this. But so Black Diamond is really pivotal for performance. So we'll use them for performance. And then we have Charles Schwab as our custodian. So all the assets will go into the custody of Charles Schwab.
Yep.
And then if we have financial reporting needs or other financial planning needs, we use eMoney. And then we have other softwares that we use that are more ours, that I think I'll keep secret, but some
Is
things
this
that we
internally developed software?
internally developed softwares, exactly,
Gotcha.
for algorithmic trades and things of the sort that we use that are really interesting.
So I know you guys have an affiliated hedge fund, right?
We do.
You're partnered with an affiliated hedge fund.
Yep.
Are these proprietary softwares things that hedge fund is using, or is this something that you're using inside sort of the wealth management firm proper?
Good question. So you're right. So there's the two aspects of what we've been able to do. There's the family office, which is the wealth management firm. And then on the side, we have a hedge fund, which is a totally different entity from us, but yet related at the same time because the general partner is the same owner as us, or a piece of it. And so you're right, it is different. Now the algorithms that we use for the trading on this hedge fund are different than the algorithms and the things we use for trading wealth management client money. But it's a very good way to send capital over, and the performance has been quite spectacular. So
tell us a little bit about how you got involved in that side.
luck, I'm telling you, I fall into these things and I just, it's amazing what happens. It's maybe I'm just blessed. I met a very, very close friend of mine at church up in Jupiter. And he is a savant of a guy. I mean, you know, when they're super humble and just absolutely brilliant, that was this person. And he created, and I'm giving him all the credit because it's true, he deserves it. He created an algorithm that's trading commodities futures contracts. And he has pumped returns for year after year after year. I mean, near 70%, 60% returns year after year after year. And because it's a futures contract, you're taxed at a 60-40, 60% long-term gain, 40% short-term. And it's doing absolutely phenomenally well. So we're raising money and it's just a wonderful route for client money to be able to go and partake in. When you're a part of our firm, it's easy for me to be able to say, well, I have this thing that's also pumping money. Do you have interest? And if they have interest, it's very easy to send capital over. So it's going really well.
So what's the track record of it so far? Like how long has that been going?
Sure, 3 years. 3 years we've got it, and now we're really building it and starting to market this thing outside of just the friends and family model. And I would deem that wise, truthfully. You don't want to start raising money until you have a decent track record.
Yeah, I mean, like you said, it seems to outperform, especially these past 3 years, I would say, have been highly atypical years.
Oh,
right?
yeah.
Commodity markets have been extremely different than they've been, the 10, 15 years before that.
Absolutely.
So it'd be interesting to see how it performs going forward.
Exactly.
So what is the time frame, going into your wealth management company? We're working with this one family.
Sure.
Are you still working with them?
Still, yes, very much so. Very
so
close.
they're your first client, basically.
Yeah,
your wealth management.
That's exactly right. Anchor, whatever you want to call them.
Yep.
First client, without a doubt. I learned everything from them. I owe them just about everything. And that's exactly right. So they're the anchor. I still serve them in every capacity in which I did before. And then I'm just taking on new clients as each day goes on. Other people are calling me, hey, I know you're now open to take on new clients. Can I come join?
So what's your client count now? How many are you
About
up to?
23 at the moment. 23 outside the anchor.
And then what's your AUM?
But we're in the millions, so.
Tens of millions? Or?
Yep.
I'm not 100 million yet, though.
Not there yet. Not SEC regulated yet. Outside of the anchor. That's correct.
Right. So you guys are currently, you're a state registered investment advisor in Florida.
That's right.
And then what's the scaling like, right? So again, you've been at this for less than a year.
Yep.
You have 23 clients.
Yep.
Tens of millions in AUM.
Yep.
Have you hired people? What's your team like?
Yeah, so it's exactly right. So we are hiring, as we mentioned earlier before. I need to bring on new people. Ultimately, for me, because I am serving these clients personally, my biggest hire will most likely be more of an executive assistant or somebody to help with all the data entry and things of that sort. So it'll be more of an associate role.
Yeah, so I want to ask about scope.
Sure.
I think wealth management can mean a lot of different things, right? Sure. It can mean I am investing in stocks and basically managing a stock portfolio. It could mean, I'm also managing real estate. It could mean I'm interacting with the tax people. It could mean I have a lawyer on staff. It could mean I am doing estate planning. It could mean I'm helping your kid get into college. It could mean, I'm picking your kid up from their private school. Like there's a lot of things. And so I feel like it's an interesting business that I think a lot of entrepreneurs don't get into for many reasons. One of which I think is a lot of high-end wealth managers try to provide everything.
Sure.
And it's like if you're doing everything from getting your kid into college to managing insurance to managing stocks, it's so broad that it can be hard to scale.
That's true.
Because you can't specialize. At the same time, it obviously can be a very lucrative business. It has the ability to, you're sort of providing an all-in-one solution, so which is very attractive. What's the route that you guys are taking? What's your vision?
Think of it this way. We're the quarterback for the team. And ultimately our job is to pass the ball to other teammates. So I'm not the one actually writing up the estate plan. I'm not putting together an IDGIT or a GRAT or anything else of the sort, but I have people in which I trust that can help me do that for my clients. But I need to be the one that's making sure that each client has the IDGIT or the GRAT or the revocable trust or anything else of the sort that they need. So my job is to make sure that we have every single vendor, I'll call them, available for each of these clients when they need them. When it comes to what we do well, our focus is the investment side.
Are you quarterbacking within the scope of everything related to assets? Do you go into insurance? Do you go into helping getting their kid into college? If someone says, hey, I need a gardener, everything?
Everything, if that's what, okay, here we go, we're having fun now. So when you are running a just wealth management firm, you won't get that deep in the sense of gardener writing their checks, doing all their bill pay. But when you get into family office work, which is what I've been accustomed to for a little while, you do have that responsibility. So it really depends upon the client and their needs. If the client is larger in net worth and does need that service, we can provide it for them. We can write their checks. We can make sure that everything is paid on time. We can make sure if they need a house manager or a captain for their boat or something of the sort, that they'll have it and we'll be the ones interviewing for them. But if they're not in full family office, we're still serving in the insurance, tax, estate planning, everything else, investment.
So are you offering levels? You said full family office.
Correct.
What are the packages that you guys?
Sure. So yes, it is levels. So of course there is the asset under management fee for just overall investment management. And then that will include the quarterbacking toward estate planning, other things of the sort. When things start to get complex and they're looking for more family office, in touch, deep service, there's another layer of work that we're going to have to put in. So that will require other compensation. But that's all, it's very negotiable. It's either hourly or it's a fixed rate.
And so what's your AUM fee? Is that 1%, 2%?
Depends on the assets. If it's a smaller amount of assets, it's a little over 1%. If the assets start to grow well over the 10, the 25 million, we'll drop it from 1% down to even a basis point. It could be 85 basis points, 90 basis points, 75 basis points. Depends on the assets.
Gotcha. What is your capital allocation strategy? Do you work primarily with, you're allocating to PE funds, to VC funds? You have a public markets guy, or are you handling a lot of that in-house?
Yep.
Real estate, I imagine, is a big component for a lot of these clients.
Yep.
Are you going out and finding individual deals? Are you just investing in real estate funds?
You asked a lot of questions, so let me start with what we do very well and what we allocate out. So we are very, very good with U.S. publicly traded equities. That's what we focus on. That was my background, and that's what I love, truthfully. So we're very good at focusing in our lane and focusing on that. Now, when it comes to investing in real estate or investing in private equity or angel investments or other sorts of stuff, a lot of that will be outsourced to other great managers, other great private equity firms. If there's other good private equity firms that I know that are spectacular, I would be happy to partner up with them and let them manage that capital. So the majority of the assets will be invested in U.S. equities, maybe some international, of course, but focus on primarily U.S. equities. I'm a big fan of the United States, and I think we'll be just fine over time. So,
yeah,
I'd rather stay in that.
A lot of emerging markets haven't really done much in terms of performance.
We're going to hang home for a little while. But all the other things in the sense of just alternative investments, we will send to those whom we trust.
So let's talk real estate, right?
Sure.
I think real estate is a big component.
Yep.
Are you purely investing in other funds? Do you invest in fund of funds? Do you advise clients on a percentage of like real estate versus stocks?
Totally depends on each person. Depends on the age, depends on the demographics, depends on their own temperament. Temperament's important in investing. If the person doesn't have the temperament for vicissitudes of markets, which are inevitable, you have to be careful with what
that means ups and downs.
That means ups and downs. That's all it means. It just means craziness, and it's inevitable. It's going to happen. If the person does not have that temperament, then you have to be very careful with what you're investing them into. If the person does have the temperament, then I'm more focused on usually not fund of funds, but rather funds that go directly into, I'd rather invest the capital directly into the private equity firms, or even have co-investment opportunities. Because there's a lot of funds out there, or managers that have co-investment opportunities where they find deals, they think it's a great deal, they just don't have all the capital in order to buy it. And they go out to other family offices and wealth managers and they look for additional money to help them co-invest into this property. And so those are very interesting.
And do you have a recurring set of firms that you work with? There's statistics on a lot of the performance that you can get comes from these smaller managers. At the same time, they don't have as much of a track record. So do you focus more on large established VC firms, PE firms, real estate syndicators?
Yep.
Or are you looking for, we're going to go with the smaller guys, it's a lot more due diligence,
Yep.
harder to test whether they actually have what they say,
Yep.
but the upside potential is higher?
Sure, you have to be focused on both. You really, really can't just focus on one. You have to be always looking at new alternative people that are coming into markets that are brilliant and may have something special, but you don't put all your eggs inside of that basket. So we work with both. We work with some very, very well-established firms for, again, the temperaments of the clients who maybe are not interested in the new emerging managers, which is understandable and respectable. And then there are some that want to have a little bit allocated to those whom are on the up and up, but they only have a track record of a year, or 6 months, or 2 years even, which is a short amount of time if you ask me.
Especially right now. Like 2010
Yep.
to 2019, not as good as seeing a track record from 2018 to 2023. There's so much more that's happened. Like if you were able to succeed during the whole thing,
Yep.
that's pretty impressive.
Oh, you hit it on the head. And the truth is, even more, I mean, if you look deeper into real estate, we're talking about real estate. I mean, a lot of the guys that are in commercial real estate or anything of the sort are all utilizing some sort of floating loan.
Yeah.
And floating loans were fantastic 5 years ago, 4 years ago, but now it hurts a little bit, the interest rates are
a lot bit.
a lot of it. Yeah, they're in some trouble, some of them. I know a few. So ultimately it's a question of, well, how are they reacting to the current environment? What are they doing? Were they able to hedge against the issue in which we're in now, which is a high interest rate environment? Now your loans are very expensive. And how are you navigating out of it? And if you can dive deep into those firms,
a lot of real estate syndicators in trouble right now.
a lot, my friend, and it's sad, And the longer interest rates rise, the further into the trouble they're going to end up, and that's the
I
issue.
think the shoe is yet to drop.
Right.
Like there is a lot of underwater commercial real estate that has not fully been realized yet.
No, it's true. It's true. And I mean, there's some good news that the Federal Reserve has reported, yesterday, and you read about how interest rates may be dropping in the next year. We will see. I'm not in the camp of interest rates are going to drop as fast as everybody believes they will. I think they will perhaps stay elevated for a bit longer. I relate inflation to, well, actually, this is probably my mentor saying this. I'm repeating what he says. He would relate it to losing weight. If you're overweight, you lose your first 30 pounds. That was easy, but the last 10 pounds, that's the tough part.
At least with inflation, though, that last 10 pounds, you can just change the scale.
Sure.
Like the Fed, they can just be like, we brought it down to 3.5%. Now we're going to slightly change the definition of CPI and oh, look, it's 2.5%.
Yeah, that'll do, But if they're focused on getting that 2%, that's going to be a doozy. But so far so good. I mean, we're in a softer landing than I would have expected.
Or we're just, brushing the treetops on the way down.
That's right. We haven't hit the ground yet, but we're getting there.
It's so soft up here in the canopy.
That's it. It's nice. But we need to land eventually. And, right, are we going to be on the wheels or where are we going to end up? I don't know.
So going back to your wealth management business, interacting with clients, what is your communication protocol? Like, do you send out a weekly email? Do you send out monthly updates? Do you wait for people to reach out to you and you provide them whatever they want?
Sure.
How do you think about, how much should I be communicating with clients? What am I communicating with them? I don't want to panic them, but I also want to make them feel like they're as involved as they want to be, but not more so.
Sure. Well, you're right. So there is a balance. The answer is your client should never be phoning you and asking what's going on. That would be a problem. Communication is utterly important. So for us, we are at least on the phone with you every month, no matter what. At least talking about what's going on in current markets, where their account is, what else is new, because there's a lot of things that go on month to month to month that we can follow up on, whether that's estate planning or taxes or going over the investments, or they have other things in their life that they have questions on. So we're on the phone no matter what monthly. But that doesn't mean we're not on the phone maybe every 2 weeks because there's something going on and we need to follow up on these things. If they have tax questions and we need to make sure that something is done in time, we need to hit some sort of due date. You're on the phone with them quite often. But at the same time, you don't want to annoy them. They don't want to hear from you every day. So there's a fine line, there's a balance, but we're on the phone as much as we possibly can without being annoying. We won't just phone you without valuable information to help you.
I've been listening to an audiobook on Charles Schwab. You guys mentioned that you
hold custody of Charles Schwab.
Charles Schwab compete with the original securities brokerage model. It's like, we're going to do something that's much more DIY, minimalistic. We execute your orders, 2 transactions. I'm curious, in other assets outside of public securities, do you guys experiment with sort of these alternative investment platforms that are trying to do something similar, right? So there's a number of startups that I've talked to in the last year and a half that are working on a marketplace for secondaries or a marketplace for private alternative investments that gives a lot more control and a lot more responsibility to the investor. So, you don't want to go through your investment advisor to get a share in this PE company.
Sure.
Have you guys used any of those tools internally to find investments that maybe, I want to get it, some shares of SpaceX, but I don't have the connection that can get me shares of SpaceX, sure, but I can get it through this platform. Or my client, right, they really like Texas, and I don't know the people in Texas, right, so but I can find, a real estate deal through this platform that
sure
gives basically GPs in Texas real estate a place to market themselves
sure
to investors. Have you guys found anything like that useful? Is it a thing you think about?
So that's a really interesting question, and we have looked into a lot of these specific firms that you're referring to, and they may not even be firms. They could even be individuals that are just gaining you access into these things, and we've looked into them. Some of the things that we've come across that we haven't truly loved in some aspects were the way in which you were getting on the capitalization table. How are you actually investing into these firms or businesses or whatever else you're investing into? SpaceX could be an example. How are you invested into SpaceX? Are you invested
frequently through an SPV?
Through an SPV? Or is it through some other vehicle? Is it through another hedge fund, another limited partnership? Is it through some other person? How are you investing? I would rather be directly on the capitalization table. I'd rather be on the cap table, or at least my client, if whomever is interested in SpaceX, I'd rather them get on the cap table rather than through an SPV.
Yeah.
But if that's the only way that you can get on, that's fine. ultimately, a lot of the ways that we found using this method just were not as wise as finding your own way on the cap table or knowing somebody there, and it required us to do some work. I would argue less is more. Less is more. Find a few really, really good things in your life that are very attractive, and then go into those. And don't get distracted with you need to be into 100 different things and find tons and tons of deal flow. Because I've seen a lot of deal flow. I've seen a lot of things that not everything works.
No, I agree. I actually brought up the SpaceX example as an interesting one because I had a friend who was a securities broker, and he had this offering of SpaceX stock, and I looked at it and I was like, boy, this does not look very attractive at all. First of all, you're taking like an 8% commission.
That too.
Second of all, the valuation is ridiculous. And even if you're like, this is going to be $1 trillion company, it's like, sure, what, you're going to go up 10x from here? You're taking a lot of risk at a really high valuation. You're paying a hefty commission. And maybe you get 10x. It doesn't matter if it's $1 trillion, it's 10x.
Right.
And same thing.
Exactly. And those people are incentivized to sell that offering. Yeah. Their commissions, all they need is to make sure that you buy the offering, and then they're paid and they're done. They don't have to worry about whether the stock does well, the underlying business does well. None of that matters to them. So when you're looking into that, you got to be very careful, because a lot of things, they sound good on paper, but sometimes are just not as good as you think. So you got to really be careful and say no to about 95, 99% of things that you're actually offered.